Welcome back to Alpha Recap. I'm glad you could join us. Today we're unpacking a pretty classic rotation day from May 20th, where growth and thematic names led and some rate-sensitive sectors lagged. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. There was a lot in the tape. AI and content headlines pushed tech and media, while finance and parts of energy felt the headwinds from Fed commentary and some geopolitical noise.
So let's start broad. Markets close mixed, right? Tech and communications finished up, while finance and some energy names closed down.
Exactly. It was rotation at work. Money moved into growth and thematic exposures tied to AI and content, and out of the areas most exposed to interest rate shifts and regulatory risk.
Walk me through the main headline drivers. What really stood out?
First, product momentum. Google's developer conference, Google I/O, had a bunch of AI desktop and ad experiments. That accelerated the growth narrative for platforms and cloud providers. Second, a big box office hit and distribution wins in media gave the content side a real boost.
Hold on, say that again. A box office hit moved markets?
Yeah, a single hit film crossing about $700 million changes how studios and streamers think about pricing and windows. Netflix getting a premium IMAX window was a tangible example of that leverage.
Big movie days.
Big movie days indeed. Content still matters in a way that feeds into valuations and monetization for media companies.
Meanwhile, there were tangible project milestones in utilities and materials. Tell our listeners what those were and why they matter in plain English.
TerraGen brought a 125 megawatt project online, Lockhart 3, and a storage vendor rolled out a higher capacity battery product called Elementa 3. Rio Tinto also reported a dispatch milestone of about 8 billion tons. Those are important because they're evidence of real, on-the-ground progress for the energy transition, and they feed order books for equipment makers and miners.
Right. And the other thing is permitting and execution still matter, yeah?
Exactly. The announcements are great, but permitting delays, policy uncertainty in places like California or the EU, and supply chain hiccups can still create episodic volatility. Execution risk is the watchword for Capex-heavy sectors.
Okay, a shift to the downside. Finance and parts of energy had a rougher time. What drove that?
Two main things. Fed minutes released that nudged the odds toward tighter policy, which is not great for rate-sensitive sectors, and regulatory scrutiny resumed on fintech and crypto-adjacent activities. Add in actual headlines like a crypto ATM bankruptcy and increased oversight of trust charters, and that created a cautious tone for banks and fintech.
Not a great day for the financials then.
No, not great. Analysts noted that higher for longer rate expectations force banks to reprice earnings models, and compliance costs for fintechs can eat into growth.
Let's unpack a couple of the big moves highlighted in the recap. Start with Google and AI. Why did that matter in a practical sense?
Platform-level AI features do a few things. They can lift ad click-through rates, change pricing power in ads, and increase demand for cloud compute, GPUs, and CPUs. So when Google introduces desktop assistant features and ad experiments, that can translate into faster near-term revenue growth for ad platforms and cloud providers. And it ripples into enterprise software vendors who build on those services.
So the spillover is across advertising, cloud, and enterprise tools. Got it. And the media moves. Netflix getting an IMAX window and a movie crossing about $700 million. Why does that shift investor thinking?
Because content is monetizable. A big theatrical hit lifts the value of IP, gives studios and streamers better leverage on pricing and windows, and can improve the return on content spend. That, in turn, supports communications and media names, where earnings are increasingly driven by franchise monetization rather than just subscriber growth.
Switching gears, materials and mining had some bright spots too. Rio Tinto's dispatch and a lithium plant MOU. How does that fit into the bigger energy transition picture?
Those milestones are direct inputs into the supply picture for metals used in electrification: copper, lithium, rare earths. When a major miner moves volume, or a new lithium plant gets a memorandum of understanding, that signals that supply is stepping up. It can ease scarcity premiums, but remember, these are long lead projects, so it's a multi-year dynamic.
There was also a note about semiconductor fragility, NVIDIA and a China-bound chip restriction. How important are these flashpoints?
They're very important because chips are central to AI and cloud. A single export restriction or a supply chain incident can create short-term dispersion in semiconductors and highlight geopolitical risk. Investors are paying a premium for supply chain resilience now.
Let's talk crypto briefly. The recap said institutional tokenization and stablecoin expansion were happening, but price action was range-bound. What's the takeaway there?
Institutional arrangements for tokenization and stablecoins suggest growing utility in the plumbing of finance, custody, settlement, so on. But legal and compliance uncertainty, plus events like bankruptcies in the crypto ATM space, keep volatility elevated. So it's adoption on one hand, regulatory risk on the other.
Short reaction. Interesting dichotomy.
Yeah, that tracks.
Give me 3 practical things listeners should watch in the coming weeks.
1. AI product cadence and monetization metrics, ad test results, and CPM movement can be leading indicators. 2. Project execution and permitting calendars for renewables. Interconnection dates often matter more than a headline project announcement. 3. Fed communications and bank-level guidance on net interest margins and deposit behavior. Those will drive the finance narrative.
And for energy managers or people exposed to commodities?
Track mining, financing milestones, and metallurgical test results for battery metals. And always factor geopolitical event risk into LNG and oil exposure. Strikes or Gulf transit issues can cause localized price shocks even when demand is sound.
We touched on a few sizable dollar figures earlier. Quick run through so listeners remember. TerraGen's project was 125 megawatts. Parabolis raised $800 million, and there was a $73.5 million acquisition in real estate, right?
That's right. Also, a roughly $8 billion plan around Penn Station was highlighted. Those are the deals and milestones people should mentally bookmark.
Let's do a couple of bite-sized reactions. I'll toss one-line topics and you give me the read. AI monetization improving CPMs?
Positive signal. Improves near-term revenue if experiments scale.
Renewable permitting delays?
Execution risk and volatility for suppliers.
Finance under Fed pressure?
Valuation compression and higher compliance focus.
Crypto regulation coming down the pike?
Binary risk events. Keep volatility high.
Nice. I want to be sure we respect our listeners' time. Give me 3 clear takeaways from today's recap in plain English.
First, AI and content headlines drove performance in tech and media. Product rollouts and hit content created real monetization narratives. Second, the energy transition is advancing with real project starts and material milestones, but Capex and permitting risk make it volatile. Third, rates and regulation are the main near-term constraints, especially for banks, fintech, and parts of real estate.
And a reminder that this is analysis and educational, not investment advice.
Correct. This is market analysis and informational only. We're not recommending any buy, sell, or hold actions or giving personalized advice.
Before we sign off, any final color on what could change the narrative quickly?
A few things. A surprise swing in CPI or core inflation that shifts rate expectations. A major AI product proving out monetization at scale, or a geopolitical disruption to energy supply would all be big. Also, any substantive regulatory moves on crypto or fintech could quickly re-rate those sectors.
Honestly, I was a bit surprised by how much content still moves markets.
It's easy to forget, but a hit franchise changes revenue math for years.
All right, Ben, great breakdown. Quick 2-sentence sign-off for listeners?
Today showed how structural themes like AI and the energy transition can drive sector leadership, but that macro and policy moves still control short-term dispersion. Keep watching product cadence, project execution dates, and Fed commentary for the clearest signals.
Thanks for joining. If you have questions about anything we cover today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. That's it for this edition of Alpha Recap. Catch you next time.